If you've been watching my content for a while, you already know that I trade ICC. That is indication, correction, and continuation. And the most common question that I get from you guys is, how do I mark up my charts? What do I look for? Where do I even start? And that's exactly what I'm going to be breaking down in this video. And if you find this video useful, please hit the like button, subscribe. Let's get started with the video. So when it comes to marking up your charts, the first thing you're going to need to do is be able to identify market structure. You need to be able to identify where your swing highs and your swing lows are. And if you don't know how to identify market structure, I have a video on my channel that explains market structure. I'll leave that in the description box down below. But to give you a rough idea, the market usually moves in two ways. It's either going up or it's going down. And if it's going up, it's called an uptrend, where the market is going to create a high, it's going to create a low, it's going to create a higher high and a higher low, higher high, higher low, and so on and so forth. And if it's going down, which is called a downtrend, it's going to create a low, it's going to create a high, it's going to create a lower low, a lower high, and so on and so forth. This is important because the swing highs and the swing lows that price is creating as it's going up or as it's going down are what we are going to be using to mark our charts. So if it's an uptrend, it's going to have a high, it's going to have a low. This is a swing high, this is a swing low. And we start from the daily time frame, identify your trend on the daily time frame, then go down to the 4-hour time frame or the 1-hour time frame and mark up your charts. So let's say we are dealing with an uptrend. You opened your charts and you found that the market made a high and then it made a low. The first thing you're going to need to identify is, what trend are we in? We are in an uptrend, right? Done. Second thing you're going to need to identify is, where is the current high in the market and the current low. Those are the first two things that you need to identify and mark out. So let's say this is where price is currently. And I'm also going to show you how this applies to an actual chart later on in the video. But let's say this is where price is. You mark your current high because this is the highest point that price reached before it started dropping. After marking that high, you need to identify where is your current higher low. Since this is an uptrend, the price came up, made a high, came down, made a higher low, then it comes up, breaks this high, creating a higher high and a higher low, and so on and so forth. So we've identified this being our high. Then we need to identify our low. This is our higher low. Since price created this high and then it created this low, these are the first two things that we need to mark out, right? I shouldn't even have done this. Let's remove those highs and lows and make it like this. So we've marked our higher high and we've marked our higher low. These are the first two things that you need to mark in an uptrend. These are important because when price breaks above here, that gives us an indication to the upside, showing us that the market is bullish. And if price breaks below this higher low, that would show us that price is currently reversing and turning bearish. So you mark your highest point and you mark your higher low. Then you wait for price to break either. So if it breaks above, that is an indication to the upside and we are looking for buys. And if it comes down here and it breaks below this, that is an indication to the downside and we are looking for sells. So if price broke above here, giving you an indication to the upside, then it's going to correct, give you a correction. Then you can then enter your trade and trade the continuation. And I need you guys to remember, when marking up your charts, you mark your charts from the 4-hour time frame or the daily time frame. You can also use the 1-hour time frame, but I've found more success using the 4-hour time frame and the daily time frame. So let's hop onto the charts and let me show you how to mark your charts on an actual chart. So first things first is identifying the trend. And if you go to the daily time frame, we can see that gold has been in a downtrend. We have a low, we have a high, have a higher low, lower high, lower low, lower high, lower low, lower high, lower low, right? When we come to the 4-hour time frame, what can we see on the 4-hour time frame? As you can see, we have been bearish because the market has been dropping to the downside. So the first thing I would mark out is, where is the recent swing low that price created? And I use the horizontal ray to mark my charts. If you need to find it, on the left side, if you go to trend tools, you'll see it over here and you can favorite it so that you can get it here. So if you select the horizontal ray, we need to identify where is the last low that price created. That would be down here. And I'm going to mark that first. This is the last swing low that price created. And I'm going to use the candle body close when I'm marking my charts. This is purely out of preference, and I found that this is what works for me. After marking out the last swing low that price created, which is also a lower low, I'm then going to look for the last swing high that price created, which is a lower high. And if you look at current price, this is our last lower high that price had created. So currently we have our swing low marked out and we have our swing high marked out. We have marked this on the 4-hour time frame, right? If we come down to the 1-hour time frame, this is how it looks. As you can see on the 1-hour time frame, this is still our swing high And this is our swing low that price created. The next thing you need to do if you are trading ICC is wait for price to either break below the swing low or break above the swing high. And with the current price on gold, we have now broken above the lower high, giving us an indication to the upside. So step 1 and step 2 are done. We identified the trend on the daily time frame. Then we came down to the 4-hour time frame and identified where our current swing low and our current swing high are. We then marked our current swing low, which is your lower low, and our current swing high, which is your lower high. After marking these two, we then sit on our hands and wait. We wait for price to either break above the swing high or we wait for price to break below the swing low. So currently price on gold broke above, giving us an indication to the upside. So if you trade ICC, you know it's indication, correction, and continuation. We currently have our indication, which now makes this our key level. This is our key level because this is where price has broken above the swing low. We then have to wait for the correction. So if price ends up correcting and creating a higher low, and then comes back above our key level, that would be our key to enter buys, right? This would be our entry. Your stop loss would be just below the higher low that has been created, and your take profit would be where the indication stopped. That would be your trade setup. But if this is the start of a bullish trend, instead of setting your take profit at where the indication stopped, look at your chart and identify where are the last swing highs or your last lower highs that price had created, because these are the places where the sellers are sitting. So if you look at this chart, we can see that this is a lower high, right? So we mark that out. The next lower high is up here. This is another lower high. So instead of setting your take profit where the indication stopped, you can now put it at the next level of sellers. The next level of sellers in this scenario is your lower highs, because we were previously in a downtrend. The market is now switching to an uptrend, right? We've broken above a swing high. We have an indication to the upside. So if price makes a higher low and it doesn't come down here and break this swing low, right? If it comes here and creates a higher low, that means we are bullish. Yeah. And if it keeps on building higher highs and higher lows, your take profits should be where the next level of sellers are. So that's example number 1. And that's how I am currently marking up my chart when it comes to gold. Price has already given me an indication to the upside, which shows me that anything above 40.92 is going to be buying. All right, that was gold. Let's mark up another pair with you guys. This is EURUSD on the 4-hour time frame, right? And like we said, the first step is going to the daily time frame. From the daily time frame, figure out what is the current market trend. And as you can see, EURUSD has been in a downtrend where we have a low, have a lower high, have a lower low, lower high, lower low, lower high, lower low. All right, so now that we know we're in a downtrend, step 1 is done. The next step is to look for your swing lows and your swing highs. So I'm going to select my horizontal ray tool. I'm going to look at current price and figure out where is my recent low, which is down here. And I'm going to mark that. And remember, like I said, we use the candle body close, not the wicks, right? After marking out our swing low, we have to look for our swing high. Where is the last lower high that price created before making all this move? That is up here, right? And we are going to also mark that out. After marking our swing high, where is the last lower low that was broken before price created all this movement? That is right here, right? So we mark that out also. And as you can see, we had a lower low, we had a lower high. We have a break of structure to the downside, giving us our indication. We have a correction currently happening, right? That is all you need. But if you need even more confirmation, we have another swing low that was broken, which was around here. This is another swing low and a level of sellers that was broken because price broke this lower low and then it came down and also broke this lower low, which means if price is to correct up to this point, come back down, we have selling potential. But even if it doesn't reach this point, if it comes back within this space, corrects and comes back below this line, we will be taking sales because this is another break of structure, which is also another indication, right? That is literally all you need. You mark out your swing low, you mark out your swing high, and then you mark out your previous lower low that was broken to create all this movement. So if you go to the 4-hour time frame, this is how it looks like on the 4-hour time frame. And as you can see, this is the swing low that was broken to create all this movement, giving us our indication to the downside. This is our swing low that price has currently created. Broke structure to the downside, giving us an indication. It's currently correcting. Looks like it wants to continue. This black line is the second swing low that price broke while it was creating this movement. And as you can see, we are using the candle body closes, not the wicks. So if you look at this, we have our lower low, have a lower high, have another lower low, which gave us our indication to the downside and broke structure. We had a correction, creating a lower high. Price has failed to break above here. Got to this point, it started building bearish movement. It has made another lower high, and if it comes back below this black line, that would be your confirmation to take this sell trade and take it from here all the way to down here. That is all you need. The next thing you need to do is just set an alert and wait for price to trigger any one of your alerts. So if I was to set any alerts on this chart, I would set an alert here, I would set an alert here. If price does correct and reaches to this point and starts dropping again, that is my key to enter sales. And another alert right here, because like I said, anything below here has potential to sell from here all the way to down here, and anything below here has potential to sell from here all the way back to down here. And if you want to know how to set your alerts, with the free version of TradingView, you will be able to set only 3 alerts. So if you want to know how to set your alerts, all you need to do is right click, go down here to add an alert on EURUSD, put in the price that you need the alert to be at. The reason why I use the horizontal ray is that it shows you what price you are targeting, right? So if I want to take sales below here, it is already showing me right here that it is at 1.15060. So this is the price that I would put in here if I want an alert at this level. So I can change it to 0.15060 and then change it to either crossing up or crossing down. If you are looking for sales, you want to click crossing down, because we only want to be alerted when price comes back below this level. So I'll click crossing down. If you are buying, then you have to use crossing up, because you'd only want to be alerted when price comes back above a level. And then I'm going to change the trigger from only once to every time. This is going to send you an alert every single time price comes back below this level. And then I'm going to press create. And just like that, you have an alert at that level. And as you can see, it says EURUSD crossing down at 1.15060. But yeah, that's how you set alerts on TradingView if you guys needed a brief example of that. So let's do one more pair for you guys before we conclude this video, just to make sure that you guys have understood what I'm saying. Let's look at silver. So this is already marked up, as you can see, but this is a good example to show you guys that this is how I mark my charts. I don't have a million lines on this chart. All you need is 1 to 2 lines on your chart. So let's remove all these markings and start afresh. Go to the daily time frame and figure out the current trend that the market is in. On the daily time frame, we can clearly see that silver is bearish, right? Because we had a high, we had a low, had a lower high, lower low, lower high, lower low. We created a lower high, and that is where we're currently at. So from this, we can clearly see that silver is bearish. So after that, let's figure out the last swing low that price has created. This is the last swing low price has created. Then figure out where is our current swing high that price had created. This is the current swing high that price has created, right? Because we have a low, we have a high, we have a lower low, we have a lower high. So we have our swing low, we have our swing high. Then we have to figure out where is the last lower low that price broke while creating this movement. This is the last lower low that price broke while creating this movement. So currently we've marked out our lower low, we have a lower high. We have a break of structure giving us an indication and another lower low. Then we have a correction and another lower high. And then we have a continuation. So you mark your swing low, you mark your swing high. Then you mark the last lower low that price had broken to create this movement, which is right here. This is on the daily time frame. If we go to the 4-hour time frame to refine our lines, as you can see, this is the last lower low that price broke, giving us an indication to the downside, right? This is where the indication stopped and our current swing low. So instead of using this as our swing high, as you can see, price broke structure to the downside, giving us an indication. Currently, price has already corrected back to our point of interest, and it has also created a new lower high. So instead of marking this or marking this, we can now use this one as our swing high. So we mark this out as our recent swing high, right? Swing low, swing high, swing low, swing high. Break of structure, correction, creates a swing high. Then we go back to the downside for the continuation. So currently this is marked out because if price was to come back and break above this level, giving us an indication and a correction, that means the market on silver has turned bullish. It's important to mark these out because these are key levels that show you what price is doing. I hope this is really easy for you guys to understand. But if you are really still struggling with this, go to the indicators tab and search for pivot highs and lows. This one right here. I already have it on my chart. So if I turn it on, this is going to show you where your swing lows and your swing highs are. And as you can see, this is these small numbers that you can see right here. And as you can see, this is why we marked here, because this is a swing low, this is a swing high. This is a swing low, this is a swing high. Or if you can say this is a lower low, this is a lower high. Lower low, lower high. This is going to help you identify where your swing lows are and where you should be marking price. So use pivot highs and lows if you're still struggling to find where your swing lows and your swing highs are. So I really hope this video helped you out. If it did, like the video, subscribe to the channel, leave any questions that you have in the comment box. And if you want to learn how to understand market structure, click the video that's on the screen right now. Thank you for watching. Peace.